Question 1. Commercial property insurance. Non-scenario. A commercial property insurance policyholder experiences a fire that destroys a portion of their insured building. The policy includes a replacement cost valuation clause. Under this clause, what determines the amount the insurer will pay for the damaged portion of the property: A. The actual cash value (SEV) of the damaged property less depreciation. B. The cost to repair or replace the damaged property with materials of like kind and quality without deduction for depreciation. C. The appraised value of the property immediately before the loss occurred. D. The market value of the property at the time of the loss. Answer: B. The cost to repair or replace the damaged property with materials of like kind and quality without deduction for depreciation. Explanation: under the replacement cost valuation clause, the insurer pays the cost to repair or replace the damaged property with similar materials without accounting for depreciation. This differs from actual cash value (SEV), which subtracts depreciation from the replacement cost. The appraised value and market value are irrelevant to determining insurance payouts under a replacement cost clause. This principle is governed by Kentucky property insurance laws, which emphasize indemnity to restore the insured's financial position without unjust enrichment. Question 2. Business owners policy BOP scenario-based scenario. Mr. Alvarez owns a small bakery in Kentucky. He has a business owner's policy BOP that includes property coverage and liability coverage. A water pipe bursts, causing significant damage to his baking equipment and rendering the bakery inoperable for 2 weeks. Mr. Alvarez files a claim for his losses. Which of the following statements accurately reflects his coverage under the BOP? A. The BOP will cover the cost to repair the water pipe but not the damage to the baking equipment. B. The BOP will cover the damage to the baking equipment and lost income during the 2 weeks the bakery was inoperable. C. The BOP will cover only the lost income as equipment coverage is excluded. D. The BOP will not provide coverage because water damage is excluded in standard policies. Answer: B. The BOP will cover the damage to the baking equipment and lost income during the 2 weeks the bakery was inoperable. Explanation: a business owner's policy BOP typically includes both property coverage and business interruption coverage. Property coverage addresses physical damage to covered property, such as the bakery's equipment, while business interruption insurance compensates for lost income during the period of restoration, while water damage exclusions apply in some cases. E.g., flood damage from a burst pipe is generally covered. Kentucky-specific BOP provisions reinforce these standard coverages, emphasizing comprehensive protection for small businesses. Question 3. Liability policy provisions. Non-scenario. Which of the following best describes the aggregate limit ECA commercial general liability CGL policy? A. The maximum amount the insurer will pay for all claims arising from a single occurrence. B. The total amount the insurer will pay for all covered claims during the policy period. C. The maximum amount payable for bodily injury claims, excluding property damage claims. D. The amount the policyholder must pay before the insurer covers any claims. Answer: B. The total amount the insurer will pay for all covered claims during the policy period. Explanation: the aggregate limit is the maximum amount an insurer will pay for all claims combined within the policy period, regardless of the number of occurrences or claims. It differs from the per occurrence limit, which caps the payment for a single incident. Option C incorrectly limits the aggregate limit to bodily injury claims, while D confuses the aggregate limit with the deductible. Kentucky regulations align with standard CGL provisions, ensuring clarity on policy limits to prevent disputes. Question 4. Umbrella and excess liability insurance. Non-scenario. What is the primary purpose of an umbrella insurance policy? A. To provide coverage for risks excluded by the primary insurance policy. B. To offer coverage in situations where the insured's primary policy limits are exceeded. C. To replace the primary policy when it is cancelled. D. To serve as the only liability coverage required by businesses. Answer: B. To offer coverage in situations where the insured's primary policy limits are exceeded. Explanation: an umbrella policy provides additional liability coverage beyond the limits of the insured's primary insurance policy. While it can sometimes cover risks excluded by the primary policy, this is not its primary purpose. Options C and D are incorrect, as an umbrella policy supplements but does not replace primary coverage. Kentucky-specific laws require clear documentation of umbrella policy terms to ensure policyholders understand their scope of coverage. Question 5. Commercial general liability CGL scenario-based scenario. Mr. Brooks owns a retail store. A customer slips on a wet floor, sustaining injuries. The customer files a lawsuit for medical expenses and pain and suffering, which coverage under Mr. Brooks' CGL policy will address this claim. A. Coverage A. Bodily injury and property damage liability. B. Coverage B. Personal and advertising injury liability. C. Coverage C. Medical payments. D. None of the above. Answer A. Coverage A. Bodily injury and property damage liability. Explanation. Coverage A CGL policy addresses claims arising from bodily injury or property damage caused by the insured's negligence. While Coverage C may provide immediate medical payments without litigation, it does not cover pain and suffering. Coverage B pertains to offenses such as defamation or advertising-related injuries. Kentucky liability insurance regulations reinforce the role of coverage in handling liability for third-party injuries. Question 6. Inland marine insurance, non-scenario, which of the following best describes the purpose of a builder's risk policy under inland marine insurance? A. To protect contractors against liability for workplace injuries. B. To insure buildings under construction against physical loss or damage. C. To provide liability coverage for tools and equipment on a job site. D. To ensure the transport of goods over land. Answer. B. To ensure buildings under construction against physical loss or damage. Explanation. A builder's risk policy is a type of inland marine insurance that protects structures under construction and associated materials against risks like fire, theft, or weather damage. It does not cover liability for workplace injuries, tools and equipment. C. Or transport of goods. D. Kentucky-specific inland marine regulations clarify the scope of builder's risk coverage to prevent gaps during construction. Question 7. Crime insurance, non-scenario, which coverage under a commercial crime insurance policy would respond if an employee embezzles company funds? A. Forgery or alteration coverage. B. Employee theft coverage. C. Money and securities coverage. D. Fraudulent transfer coverage. Answer. B. Employee theft coverage. Explanation. Employee theft coverage addresses losses resulting from dishonest acts by employees, such as embezzlement. Forgery or alteration coverage pertains to fraudulent checks or similar instruments. Money and securities coverage protects against theft, disappearance, or destruction of cash or securities by non-employees. Fraudulent transfer coverage, though relevant in some cyber policies, is not part of standard crime insurance. Kentucky crime insurance provisions ensure clarity in differentiating coverage options for businesses. Question 8. Commercial Package Policy CPP non-scenario. What is a primary advantage of a commercial package policy CPP for businesses in Kentucky? A. It reduces the need for liability coverage. B. It consolidates multiple coverages into a single flexible policy. C. It eliminates the need for endorsements. D. It automatically covers all business risks. Answer. B. It consolidates multiple coverages into a single flexible policy. Explanation. A commercial package policy CPP allows businesses to combine various coverages, e.g., property, liability, and crime into a single policy, streamlining administration and reducing costs. Option A is incorrect as liability coverage is still necessary. Option C is false because endorsements may still be added for specific needs. Option D is incorrect because a CPP only covers risks outlined in the policy. Exclusions apply. Kentucky-specific regulations emphasize the flexibility and efficiency of CPPS for small to medium-sized businesses. Question 9. Business Owners Policy BOP non-scenario. Which of the following businesses would most likely be ineligible for a business owner's policy BOP in Kentucky? A. A small retail store with 3 employees. B. A medium-sized manufacturing plant. C. A small accounting firm. D. A local coffee shop. Answer. B. A medium-sized manufacturing plant. Explanation. A business owner's policy BOP is designed for small to medium-sized businesses with low-risk profiles, such as retail stores, offices, and restaurants. Manufacturing plants typically require specialized coverage due to their higher risk and complexity, making them ineligible. Kentucky-specific guidelines for BOPS outline eligibility criteria to simplify insurance options for smaller businesses. Question 10. Cyber liability and data breach coverage scenario-based scenario. Green Tech Solutions, a tech firm in Kentucky, experiences a data breach that exposes sensitive client information. Which part of their cyber liability policy will help cover the cost of notifying affected clients and providing credit monitoring? A. First-party coverage. B. Third-party liability coverage. C. Data destruction coverage. D. Business interruption coverage. Answer A. First-party coverage. Explanation. First-party coverage in a cyber liability policy addresses the direct costs a business incurs after a data breach, such as client notification, credit monitoring, and public relations expenses. Third-party liability coverage protects against lawsuits from affected parties. Data destruction and business interruption coverages address different aspects of cyber risks, not client notifications. Kentucky cyber regulations encourage businesses to include comprehensive first-party protections in their policies. Question 11. Property insurance basics, non-scenario. Under Kentucky insurance laws, how is the actual cash value typically calculated for property claims? A. Replacement cost minus depreciation. B. Replacement cost plus depreciation. C. Market value minus depreciation. D. The original purchase price of the property. Answer A. Replacement cost minus depreciation. Explanation. Actual cash value (SCV) is the replacement cost of the property at the time of loss minus depreciation due to age, wear and tear. This method ensures the insured is compensated fairly without profiting from the claim. Kentucky insurance regulations align with this approach to maintain equitable claims practices. Options B, C, and D do not accurately reflect SCV calculation principles. Question 12. Workers' compensation insurance, non-scenario. In Kentucky, which of the following is an example of a situation covered under workers' compensation insurance? A. An employee slips at home while working remotely. B. An employee is injured while traveling for a personal vacation. C. An employee sustains injuries during a workplace fire. D. An employee is injured while engaging in horseplay at work. Answer. C. An employee sustains injuries during a workplace fire. Explanation. Workers' compensation insurance covers injuries sustained in the course of employment. Option C represents a valid work-related injury. Injuries at home may not qualify unless explicitly related to work activities. Personal vacations B are excluded, and injuries due to horseplay D may be denied based on contributory negligence. Kentucky-specific laws emphasize clear distinctions for work-related injuries. Question 13. Crime insurance, scenario-based. Scenario. Blue Ridge Enterprises discovers that an employee has been altering financial records to divert company funds into their personal account. What type of coverage under a commercial crime policy would respond to this loss? A. Forgery or alteration coverage. B. Employee dishonesty coverage. C. Money and securities coverage. D. Fraudulent impersonation coverage. Answer. B. Employee dishonesty coverage. Explanation. Employee dishonesty coverage responds to losses caused by employees' fraudulent acts, such as embezzlement or financial manipulation. Forgery or alteration A applies to documents such as checks and money and securities. C covers theft by external parties. Fraudulent impersonation D addresses scams involving impersonation by third parties. Kentucky crime insurance regulations mandate clear definitions for coverage inclusions and exclusions. Question 14. Commercial General Liability (CGL) non-scenario. Which of the following endorsements is commonly added to a CGL policy for businesses serving alcohol in Kentucky? A. Pollution liability endorsement. B. Liquor liability endorsement. C. Additional insured endorsement. D. Cyber liability endorsement. Answer. B. Liquor liability endorsement. Explanation. A liquor liability endorsement extends a CGL policy to cover claims arising from the sale or serving of alcohol, such as intoxicated patrons causing harm. This is crucial for bars, restaurants, and event organizers. Pollution liability A and cyber liability D are unrelated to alcohol-related exposures. Kentucky law requires establishments to secure adequate liquor liability coverage to mitigate these risks. Question 15. Inland marine insurance, non-scenario. Which of the following scenarios would most likely be covered under a Bailey's customer policy? A. A warehouse owner's personal vehicle is stolen. B. The garment being stored at a dry cleaner is damaged by fire. C. A homeowner's antique furniture is damaged during a move. D. A courier loses an important package while in transit. Answer. B. A garment being stored at a dry cleaner is damaged by fire. Explanation. A Bailey's customer policy protects a business, the Bailey, against loss or damage to customers' property in their care. Option B exemplifies this. Other options A, C, and D do not involve customer property or fit Bailey coverage definitions. Kentucky-specific inland marine insurance rules emphasize this policy's role in protecting customer trust. Question 16. Surety bonds non-scenario. Which of the following describes the key difference between surety bonds and insurance? A. Surety bonds protect the principal while insurance protects the obligee. B. Surety bonds involve three parties while insurance typically involves two. C. Surety bonds are risk transfer agreements while insurance is a risk-sharing mechanism. D. Surety bonds only cover criminal acts while insurance covers all risks. Answer: B. Surety bonds involve three parties, while insurance typically involves two. Explanation: surety bonds involve a principal, an obligee, and a surety. The surety guarantees the principal's performance to the obligee. Insurance, in contrast, usually involves two parties, the insured and the insurer, and covers loss or liability. Kentucky licensing regulations clarify the purpose and structure of surety bonds for commercial use. Question 17. Umbrella insurance scenario-based scenario. Lexington Contractors faces a $2 million lawsuit after a workplace accident. Their primary liability policy has a $1.5 million limit. What coverage will their umbrella policy provide? A. Coverage for the entire $2 million lawsuit. B. Coverage for $500,000 beyond the primary policy limit. C. No coverage unless the primary policy is exhausted. D. Coverage only for legal defense costs. Answer: B. Coverage for $500,000 beyond the primary policy limit. Explanation: an umbrella policy provides additional liability coverage above the primary policy's limits. In this case, the umbrella covers the $500,000 gap between the $1.5 million primary limit and the $2 million claim. Kentucky umbrella policies are designed to address large-scale risks exceeding standard policy limits. Question 18. Auto insurance, non-scenario. Which coverage under an auto insurance policy in Kentucky pays for damage to your vehicle caused by an accident, regardless of fault? A. Collision coverage. B. Comprehensive coverage. C. Liability coverage. D. Uninsured motorist coverage. Correct answer: A. Collision coverage. Explanation: collision coverage pays for damage to your vehicle caused by collisions, regardless of fault. Comprehensive coverage. B. Handles non-collision events like theft or weather damage. Liability coverage. C. Pays for damage or injury you caused to others. And uninsured motorist coverage. D. Protects against damages caused by uninsured drivers. Question 19. Homeowners insurance, non-scenario. In Kentucky, which type of homeowners insurance policy provides the most comprehensive coverage for single-family homes? A. HO1. B. HO2. C. HO3. D. HO4. Answer: C. HO3. Explanation: the HO3 policy is the most common and comprehensive homeowners insurance, covering all perils except those explicitly excluded, e.g. flooding. HO1 and HO2 offer limited named peril coverage, while HO4 is designed for renters, not homeowners. Question 20. Flood insurance, scenario-based scenario. A homeowner in a designated flood zone in Louisville suffers water damage due to a heavy storm. What policy will provide coverage for the damage? A. Homeowners insurance. B. Flood insurance through the National Flood Insurance Program (NFIP). C. Comprehensive auto insurance. D. Umbrella insurance. Answer: B. Flood insurance through the National Flood Insurance Program (NFIP). Explanation: standard homeowners insurance does not cover flood damage. Flood insurance, often purchased through the NFIP, provides this protection. Comprehensive auto insurance. C. Covers vehicle-related incidents and umbrella insurance. D. Extends liability coverage but doesn't cover property damage. Question 21. Umbrella policy, non-scenario. Which of the following is a characteristic of an umbrella policy? A. It covers all risks without exclusions. B. It provides excess liability coverage above the limits of underlying policies. C. It replaces the need for primary liability policies. D. It only applies to business risks. Answer: B. It provides excess liability coverage above the limits of underlying policies. Explanation: an umbrella policy offers additional liability protection beyond the limits of primary insurance policies, such as auto or homeowners insurance. It doesn't replace primary policies, C, or cover all risks. A. Question 22. Business interruption insurance, scenario-based scenario. A restaurant in Lexington is forced to close for 2 months due to a kitchen fire. Which type of insurance coverage will help compensate for lost income during the closure? A. Property insurance. B. Business interruption insurance. C. Liability insurance. D. Workers' compensation insurance. Answer: B. Business interruption insurance. Explanation: Business interruption insurance covers lost income and operating expenses when a business cannot operate due to covered perils like a fire. Property insurance A only covers physical damage to property. Liability insurance C protects against lawsuits and workers' compensation. D covers employee injuries. Question 23. Workers' compensation non-scenario under Kentucky law. Which of the following benefits is typically not covered by workers' compensation? A. Medical expenses for workplace injuries. B. Lost wages during recovery. C. Compensation for permanent disability. D. Punitive damages for employer negligence. Answer: D. Punitive damages for employer negligence. Explanation: workers' compensation provides benefits for medical expenses, lost wages, and permanent disability. It does not cover punitive damages, which may arise from lawsuits outside the workers' compensation system. Question 24. Liability insurance non-scenario in Kentucky. What is the minimum liability coverage required for bodily injury per accident in an auto insurance policy? A. $10,000. B. $25,000. C. $50,000. D. $100,000. Answer: C. $50,000. Explanation: Kentucky requires a minimum of $25,000 for bodily injury per person and $50,000 per accident. This ensures sufficient protection for injuries in the event of an accident. Question 25. Inland marine insurance non-scenario. Which of the following is an example of property typically covered under inland marine insurance? A. Office furniture in a fixed location. B. Artwork being transported to a gallery. C. A warehouse building. D. A restaurant's inventory. Answer: B. Artwork being transported to a gallery. The explanation: inland marine insurance protects property in transit or movable items. Office furniture and buildings C are covered under property insurance, while inventory D is usually part of business property policies. Question 26. Risk management scenario-based scenario. A construction company in Kentucky installs cameras on job sites to monitor safety compliance. This measure represents which type of risk management technique? A. Risk transfer. B. Risk retention. C. Risk reduction. D. Risk avoidance. Correct answer: C. Risk reduction. Explanation: installing cameras to improve safety compliance reduces the likelihood and severity of accidents, making it a risk reduction strategy. Risk transfer involves insurance. Retention B means accepting risks, and avoidance D eliminates risks altogether. Question 27. Professional liability insurance non-scenario. Which professionals in Kentucky are most likely to require errors and omissions EO insurance? A. Doctors and surgeons. B. Lawyers and accountants. C. Retail store owners. D. Construction workers. Answer: B. Lawyers and accountants. Explanation: as and omissions EO insurance protects professionals such as lawyers and accountants from claims related to mistakes or negligence in their services. Doctors and surgeons typically need medical malpractice insurance. Question 28. Commercial auto insurance non-scenario. Which of the following vehicles would typically require commercial auto insurance? A. A family minivan used for personal errands. B. A delivery truck used by a catering business. C. A motorcycle for recreational use. D. A personal car shared with family members. Answer: B. A delivery truck used by a catering business. Explanation: commercial auto insurance is required for vehicles used primarily for business purposes like a delivery truck. Personal vehicles used recreationally or for errands do not need commercial coverage. Question 29. Health insurance scenario-based scenario. A Kentucky resident purchases health insurance through the state exchange and qualifies for a subsidy. What determines the amount of subsidy they receive? A. Their age and gender. B. Their income relative to the federal poverty level. C. The cost of their chosen health plan. D. Their employment status. Answer: B. Their income relative to the federal poverty level. Explanation: health insurance subsidies under the Affordable Care Act are based on the individual's income relative to the federal poverty level and are designed to make insurance more affordable. Question 30. Property deductibles non-scenario. What is the primary purpose of a deductible in a property insurance policy? A. To increase the total claim payout. B. To reduce the insured's premium costs. C. To eliminate the need for exclusions. D. To guarantee payment to the insured. Answer: B. To reduce the insured's premium costs. Explanation: a deductible lowers the insurer's risk by requiring the insured to pay a portion of the loss, which in turn reduces premium costs. It does not increase payouts, or eliminate exclusions. C.